Renaissance Capital expects Africa to be affected in three main ways by the Russia-Ukraine war. The first and most pronounced effect will be via the surge in global commodity prices, particularly for oil and wheat, which has implications for inflation, current account balances, and budget balances. Commodity exporters are likely to be the biggest beneficiaries of this conflict. To unpack this, we are joined by Yvonne Mhango, who is the head of Africa Research at Renaissance Capital. Yvonne, thank you so much for your time. I mean, the theme of inflation has been ongoing at least for the past few months or so. But when we take into consideration what is playing out in terms of Russia and Ukraine, which of the countries are most affected, especially those who have, I suppose, a high share of CPI in terms of transport and food prices?
Yes, so we're most concerned about our oil-importing countries to start. So countries like Kenya, for instance, are particularly vulnerable. These are countries that already have sizable current account deficits, and that's likely to deteriorate. As was mentioned earlier during the show, Ukraine and Russia are big exporters of wheat. They account for almost 1/3 of global exports of wheat. And we have some significant importers of that on the continent, including Egypt, which I think will be probably most affected. So our concern is that we're seeing inflation numbers tick up on the back of the surge in both cereal prices as well as the significant spike in prices of crude.
How significant is Russia's trade figures to Africa?
Okay, so Russia, total, in terms of what they account for Africa's trade, is about 2 to 3%. However, there's some countries that do trade a lot more with Russia than others. So it does vary on the continent. You'll find countries such as Uganda, Republic of Congo, do trade relatively more, and that's related to minerals. The continent primarily exports minerals to Russia. And imports the likes of fertilizer and medicine from that part of the world. And of course, food, in particular cereals, which we spoke to earlier.
What is the impact of the, I suppose, the higher, oil prices, especially for countries like Nigeria, for instance? They were talking about a fuel subsidy, and I'm wondering what the impact will be on when you suspend that fuel subsidy.
Okay, so firstly, as with any crisis, there are beneficiaries, and the commodity exporters in our part of the world are likely to benefit from what we're seeing prices do. In particular, the oil exporters like Nigeria, and as well as those that export metals and minerals, such as the DRC, Zambia, and the likes of Guinea. Now, with regard to the oil exporters, in particular Nigeria, we expect the external balance to improve significantly, the current account surplus to increase, the currency to be a lot firmer than was anticipated. So it is supportive of the Naira, which is encouraging. Our concern, though, is that quite a few countries, and not just Nigeria, subsidize fuel. And that cost is on the government in the budget. And what we're likely to see is that component swell in the budget, not just of Nigeria, but quite a few other African countries, including that of Kenya, will be impacted. So our concern is that we're coming out of a pandemic where we've already had African governments increase spending in order to try and get us through this pandemic. So their buffers on the fiscal side are a lot smaller than they were pre-pandemic. And now they're going to have to face increasing costs on the subsidy side at a time when our debt levels are already particularly high.
We were talking about, I suppose, Russia's share of trade to Africa. From a foreign direct investment, I mean, what does that figure look like, and in which sectors are we seeing that?
Okay, so Russia's a small player when it comes to FDI. And in terms of the foreign direct investment we have seen from Russia, it's primarily gone to commodity producing countries. For example, Rusal has operated in Guinea, and that's for bauxite and aluminium mining there. There's palladium in the cases of Zimbabwe, and of course diamonds in Angola under companies such as Alrosa. So their investment on the continent when it comes to FDI has primarily been in the mining sector.
As this, I suppose, these tensions play out, I mean, what other, I suppose, key aspects are you looking out for, whether it affects the continent or whether it affects the broader global economy?
I think the question that's going around now is food security, particularly if prices continue to increase. So that's one of the concerns for our part of the world. And how that's likely to manifest in Africa is through sharp price increases, which is of concern. And we have several producers or those who process food crops on the continent, and they're going to have to face rising costs of raw material, which they'll have to try and pass on to the end consumer. So there'll be that challenge on the one hand in terms of companies trying to pass on those costs, and then of course governments trying to see if they can subsidize the cost of bread and other foodstuffs. So I think the issue of food prices is going to be something that's going to increase, particularly in countries that are facing or approaching elections in the coming months. I think that will be topical. That's in addition, of course, to the rise in fuel prices.
And the idea, I suppose, when you look at the oil price, I mean, sitting at $125 a barrel, is there indication that at this point that it could climb even higher?
Well, with the announcement yesterday evening by the US that they are banning oil imports from Russia, and UK is phasing down as well, those are talking about oil price at $200 per barrel. So yes, there's certainly more upside, it seems, from current levels, which is concerning, given that that'll be record highs. I mean, our previous record high is $147 per barrel. So it looks as though things are likely to get worse before they do get better.
Before I let you go, worst case scenario, we do get to that $200 a barrel price. The fiscal pressure that you would see on certain, importers. I mean, which countries, again, let's just go back to those particular countries that would feel that pressure.
Okay, so I do think if prices get to those levels, that governments will feel compelled to subsidize some of those costs. And countries that have minimum buffers, and by that I mean are already highly indebted, are the likes of Ghana, where we've already seen the CD go over 7 to the dollar. Kenya's got also quite elevated debt levels of around 70% of GDP. So those are some of the countries I'm concerned about. Zambia has already defaulted on its debt, and they're trying to restructure it. They will be particularly hit by the higher energy prices because they're landlocked. So there are quite a few vulnerable countries to watch going forward.
Yvonne, let's leave it there. Thank you so much for your time.